Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across asset classes, talking about some of the things that have been happening in markets, and we'll probably take a quick look at that calendar as well, and talk about some of the key themes that are coming up this week. So first of all, let's jump straight into the charts, um, and we're going to talk about currency markets first. Pretty much one of the themes that's important to realize this Monday is we're seeing quite a risk on start to the week. Now, if I just show you the dollar index first, actually, before I show you euro dollar, that's manifesting itself in a continued pullback from recent highs in the US dollar. So you can see the Dixies now having been above 110, it's now just below 108, and sort of probing recent lows, although, over the longer term, very clearly still in an uptrend. Let me show you euro dollar as well. Um, it's risen back into the 101s, probed 102, but, much like the Dixies, very much still in a long-term uptrend. You got to think that euro dollar still in a long-term downtrend and actually looks to have tested this key uh, resistance. Now, what's behind the recent move? Well, there's been some developments in recent days militarily in Ukraine. They seem to have surprised the Russians with a counteroffensive in the north when the Russians seem to expect a counteroffensive to have more emphasis in the south. And anyway, we've seen the biggest shift in land control um, in months. The Ukrainians have gained, I think, about 3,000 square kilometers in like the last 4 days, mostly in this northeastern Kharkiv region. Anyway, not to get into too much detail about all the military stuff, which you guys can read in the news. But the point is, the euro and eurozone and European assets generally seem to be liking this news because, if Ukraine can bring about an end to this conflict sooner by gaining the upper hand and perhaps forcing the Russians to the negotiating table and then potentially some kind of peace deal, or potentially driving the Russians out entirely and the Russians accepting defeat, although that does seem unlikely. Um, it potentially means the conflict could end sooner, which seems to be boosting appetite in these European markets pretty much, and that's what we're seeing here in the euro. Also seeing it a bit in the pound. Remember, the pound very much also been hit recently by the Eurozone energy crisis. So yeah, the euro and the pound both up about 1%, or just shy of 1% on Monday. But do I think this long-term downtrend is coming to an end? Oh, I mean, you got to say, if we did get a technical break above 102, then you would probably quite quickly see a test of this resistance area here around 103.50. But I'm not betting on it. I'm not betting on it because, as quite a lot of analysts have pointed out, even if the Ukraine conflict is going to end sooner than we previously thought, um, that doesn't mean the energy crisis that's hitting Europe is going to end anytime soon. Because yes, okay, maybe there is an end to the conflict, but does that mean that European economies suddenly return to Russia for gas to ease their gas crisis? I don't think politicians in Europe would be naive enough to just return to Russia after everything that's happened for gas. So, it's going to be a difficult adjustment period for the European economy as they, realign where they get their energy from, regardless of what happens. Which means I don't see any, real near-term respite for the Eurozone economy, for the UK economy, on that front. Still not looking good. The US economy still performing comparatively better. And yes, we're now talking about a more hawkish ECB in wake of last week's big 75 basis point rate hike. Had some hawkish commentary from sources and a couple of ECB policymakers over the weekend. And yeah, maybe that could be enough to bump us up to 103.50, but I still think it's just tough to make an argument for the euro to see a sustained rally at this time, and I think it's tough to make the same argument for pound sterling as well. Um, Moving on from currency markets, let's have a look at US stock markets. They're in a good mood. European assets are rallying, the dollar's falling, the S&P 500 is going up, And look at this. I think we might be seeing the formation of a bit of an uptrend, which would be quite something because we haven't really seen a proper uptrend in the S&P 500, this year, really. So look at this. One, two, three touches on that uptrend. Of course, we still have the downtrend for the year. So, I mean, in a way, you could say we've now formed a big pennant. Now, we've got some important US data coming up this week, August inflation data, August retail sales data, and then next week we've got the Fed. So these are going to be very, very important themes for the S&P 500. What could possibly cause a break above this pennant? Um, well, imagine if inflation data on Wednesday, well, it is expected to fall. In fact, let me show you the economic calendar. We can go through it properly. Let's get all of the currencies on. Here we go. Okay, CPI. Oh, it doesn't show you the year over year, but the year over year is pretty much expected to fall back from 8.5% in July to around 8% in August. And you can see that we're actually expecting a negative headline month over month print, although the core is still seen remaining fairly hot at 0.3, and year over year it's seen remaining around where it was before in July, around 6% year over year. That's for the core. But it does look like this data is going to continue to feed into that peak inflation narrative, which could be helpful. We then have on Friday, just sticking with the inflation theme, we've got preliminary University of Michigan inflation expectations data. Now, this has been pulling back quite quickly in the last couple of months. And if that continues to be the case, further evidence for the peak inflation narrative. This could be helpful. Retail sales. This is we've had strong jobs data recently. We've had strong ISM data recently. Well, markets are now going to be looking to see whether consumer spending is holding up, which it might be because gasoline prices have been falling in the US in the last couple of months, which should be cushioning the consumer a little bit, even though the consumer is still badly hit by inflation. Um, the Fed, we don't have any Fed speak this week because the Fed's in blackout against ahead of next week's meeting. Next week's meeting, they are expected to raise interest rates by 75 basis points, but that's probably going to be the last 75 basis point rate hike. That's what markets expect at the moment anyway. So if the Fed does signal it's going to be slowing interest rate hikes from here, if inflation is still showing signs of rapidly pulling back, if other signs are that the US economy is still fairly robust, you know, what's to stop us pushing back towards these highs? Like the 200-day moving average here, which is around 4,250. I think we're in with a decent shot, basically. We'd need to see some big adverse things happening, potentially a big upside inflation surprise or something which causes a readjustment of Fed tightening expectations to the upside or in a hawkish direction. Um, but yeah, guys, back to the calendar. Let's just quickly whiz through what else we're expecting this week. UK, quite a busy week. We had slightly softer than expected GDP data this morning. We've got CPI tomorrow for August. We then got retail sales on Friday. So pound traders should also be keeping an eye on that. The Aussie traders will be keeping an eye on the jobs data, which is out during the Thursday Asia Pacific session. And also, traders should keep an eye on this Chinese retail sales data as well, particularly if you're an Aussie trader, because obviously that's their most important export destination. Other than that, Kiwi GDP also on the Wednesday, during the Thursday Asia Pacific session. It's on Wednesday here, but that's just because my time zone's funny. It's actually during their Thursday. And other than that, that's pretty much it. Yeah, there is quite a lot to be keeping an eye on. I'll be back with a video on Wednesday with another checkup on what's happening in markets. So I hope you enjoyed the video, guys, and I'll see you all in the next one.